Hey guys, welcome and welcome back to my channel once again. This is Abhishek, who is not a financial advisor. And before we jump into the main content, I would just like to ask you to hit that like button and subscribe the channel, please, if you haven't subscribed the channel yet, to get the latest videos on amazing content just by Abhishek. So today's video, guys, is an in-depth analysis of a company which is in the energy sector, and this video right here will tell you guys in detail about this particular company and will show you that how this company is actually presenting us with a really cheap valuation and thus giving us that chance to have that amazing margin of profit. So let's make it fun, guys. Grab onto your drinks and let's get started. So guys, the company which we are going to talk about today is actually a special purpose acquisition company, Spartan Acquisition Corporation 2, trading at NYSE with the ticker symbol SPRQ. By the way, guys, does this company remind you guys of something? If not, then let me remind you guys. So Spartan Energy Corporation is the same blank check company with the same Apollo management team who brought us with Fisker. Yes, and the SPAC growth was amazing as we saw. So I have actually no doubts in the management team of this particular SPAC company, and therefore I won't go much deeper into that because we already covered about the management and the team of Spartan Energy before in our older video when we did the analysis of Fisker. So anyways, so moving on, the company right now at the time of recording this video is sitting at $12.90 and with the current market cap of $556 million. Now guys, remember this market cap because we will be using this market cap for our evaluation. And the company with which Spartan Acquisition Corporation 2 is merging with is Sunlight Financial LLC, which is a premier residential solar financing platform. Now, Sunlight is a B2B2C fintech platform company that provides residential solar contractors with seamless point of sale financing capabilities and delivers unique attractive assets to capital providers. And through its technology and deep contractor networks, Sunlight also offers instant credit decisions and affordable solar loans to homeowners nationwide. And Sunlight prides itself on creating value for all constituents it serves: solar contractors, capital providers, and its consumers. Now, residential solar is a multi-billion-dollar market at the forefront of the fast-growing clean energy industry, and till date, Sunlight has funded over $3.5 billion of loans through its platform. Now, Sunlight's best-in-class underwriting has delivered the industry's strongest performing residential solar loans to its funding partners. And as a tech-enabled solar financing provider, Sunlight is committed to strong environmental, social, and governance principles. And all this have been possible with the best-in-class management team with unparalleled experience. Sunlight's success is driven by the deep and relevant experience of its management team with a combined 150 plus years of experience. Now guys, Sunlight's evolution over the years has been amazing. A cumulative funded volume has just been increasing exponentially, as you can see right here. Starting initially as a funding platform back in 2015, they have achieved a diversified flow of commitments which has made them achieve a positive cash flow, yes guys, and has reached a network of over 800 contractors until now. And the company is profitable. Yes, you heard it right, guys. The company is already profitable, which is one of the most interesting factors for us as investors. So just to summarize for you guys that how actually Sunlight makes their money or how their revenue model looks like, and it's quite important because we as investors should know that how the company actually gets their revenue. So just to summarize for you guys, Sunlight's business model, or let's say Sunlight's revenue model, is quite simple, and this is how Sunlight actually makes money. So Sunlight earns attractive upfront fees on loans originated through the platform with limited direct credit risk via capital light business model. So what does that mean? Sunlight Financials is enabling homeowners to easily buy the solar panels via a reputable contractor, and this contractor is known within the Sunlight's network. And then the contractor uses the Sunlight's platform, which is the capital light model limited credit risk flexible platform, to get a loan approval for the panels installation without a hassle, and this makes the whole process a lot easier and hassle free. And this is how they actually earn their money. And therefore in this particular business model or revenue model, it seems like the contractor adoption plays quite an important role, and therefore contractor adoption of Sunlight's platform, how it has affected the funded volume per contractor, is quite important for us as investors. And as we can see right here, that there has been an increase of 63% in solar contractors from 2019 till 2020, and there has been an increased penetration of existing contractors. Now, of course, the pandemic did had an impact on the average funded volume, but it seems like that in 2020 fourth quarter it really took off, and therefore Sunlight seems to have a strong path to a rapid continued growth, because Sunlight's proven execution and exceptional momentum, which is coupled with their attractive market focus, provides a strong path to a continued growth. And as we can see, and some of the drivers of their recent growth are like investments, innovation around new loan products, industry adoption of digital processes, acceleration of interest in solar post pandemic. Now, continuation of these drivers to support ongoing growth is there, and as we can see that the compound annual growth rate of 57% in 3 years is quite amazing, guys. And a compound annual growth rate from the second half of 2020 till 2023 is supposed to be at 29%. And another important factor for growth for Sunlight financials is actually solar energy prices. And the solar energy continues to become more economical in comparison to electricity, with growing adoption across the United States and globally. As the cost of solar continues to decline and electricity prices continue to rise, this makes consumer economics more favorable for solar energy companies and therefore for Sunlight financials. And Sunlight will be focusing on the rapidly growing residential solar market at the forefront of the clean energy movement. And this is because just in 2020, the US residential solar annual market size was approximately at $11.8 billion with a compound annual growth rate of 31% in 3 years. And this is because of the ongoing shift to loan financing, which increased from 42% to 63% in just 3 years. And the drivers for this continued growth were improving consumer economics from solar, like we saw because of the decline in the solar prices, and increased consumer and investor focus on ESG initiatives and increased legislative support. And because Sunlight financials have B2B and B2C business model, because of such an attractive business model, they have significant operating leverage and therefore no customer acquisition cost, which in turn means that they have fixed costs that are not growing with time, and therefore they have higher funded volume, and therefore resulting in a higher revenue growth, and which we can see right here that they are assuming, or they are anticipating, a compound annual growth rate of 36% in the next 3 years. So now let's move on to a much more interesting part of this video, which is the valuation, which means that if we would invest in this company right now, then would we be investing in an undervalued company? Would this be a value investment? Well, for that, we need to see the transaction overview. So as you can see right here, the pro forma valuation, that means the valuation after all the expenses, would be around $1.2 to $1.3 billion. But guys, this is not the valuation at which we will be buying this company right now, because this is pro forma valuation. That means the valuation after the merger is completed. So if you remember, in the beginning of this video, we saw the market cap of $500 million. Is that the market cap at which we are buying? No, not that as well, because that's the market cap of Spartan Acquisition Corporation. That's the market cap of the SPAC. So we need to calculate the approximate market cap of Sunlight financials at which we are buying this company if we invest in this company right now. And for that, this information is important for us, which is the expected post-combination ownership. So we as shareholders of Spartan Acquisition Corporation, because we will be buying Spartan Acquisition Corporation to invest in Sunlight financials, we as the shareholders, the public shareholders, will have only 26% of the ownership. So to explain this, let me pull out the calculator. Now let's quickly calculate the valuation at which we will be buying this company if we invest in this company right now. So as we saw here, the market cap, approximate market cap at this moment is $556 billion. So let me just put this into the calculator, and we divide this by the 26% shareholder ownership, which is 0.26, and that means $2.13 billion would be the market cap at which we will be buying this company right now. So what we are doing, in other words, is that if we buy Spartan Acquisition Corporation 2 at $12.90 at a market cap of $556 billion, that means we would be investing in Sunlight financials at a market cap of $2 billion. And this is really important to know, guys, at what valuation you are actually investing into a particular company before the company goes public. I mean, it is public via this SPAC, but the company itself has not been properly public. And that's why we need to see that if we are investing into the company, what is the actual valuation. So this, I think, made it quite clear for you guys. And now to see if this valuation is worth or not, for this we need to see the benchmark case, or that means we will compare this with its competitors. So let's move on. So guys, this is the first benchmark of Sunlight Financials with its competitors, or let's say a proof to show that this company is giving us an attractive valuation relative to its peers. So as we can see that with the firm value or the enterprise value of $1.2 billion for Sunlight Financials will be presenting us with a forward enterprise value of just 21 times its 2021 adjusted EBITDA and an enterprise value of 15.5 times its 2022 adjusted EBITDA. Now if that looks quite big, then just look at its competitors. Open Lending 33.1 times its 2021 adjusted EBITDA with a market value of $4.9 billion and 23.5 times its 2022 adjusted EBITDA, and SunPower and SunNova are much more expensive as compared to Open Lending. And now let's check a bit more. But before that, let's have a quick look at the company's current financials, because we will be using that to compare it with these competitors. So these are the company's financials from their investors presentation, and as we can see, the total revenue for Sunlight until second half of 2020 was $92.2 million, and they are expecting a revenue of $123 million in 2021. Now the best part here is that the company is already profitable, and the net income until second half of 2020 was $35 million, while in 2021 they're expecting a net income and not a loss of $37 million. And guys, this is another really important thing and which amazes me being an investor to look at Sunlight Financials is that their free cash flow. So their free cash flow was a negative until 2018, but from 2019 they really picked up, and in 2020 they already have a positive free cash flow of $15,299, and they're expecting a free cash flow to increase by 100% in 2021, and this free cash flow is just increasing year over year. As we can see here, the approximate or expected free cash flow is just increasing for the next years. And this is because, guys, like we saw, because of their business model and because of the increase in demand of solar energy. Okay, so now since we are done with this, now let's move forward on to our benchmark valuation. Okay, so SunNova Energy International Incorporation, which is one of the competitors of Sunlight Financials, is having a trailing 12-month period revenue of $134 million. Yeah. Now look at the company's market cap, $4.25 billion. And that's not interesting. The interesting part is here that the company is not even profitable, guys. So remember, the revenue of Sunlight Financials was approximately $100 million in 2020, and this company right here has a revenue of $131 million and is currently trading at a market cap of $4 billion. That means it is trading at approximately 40 times its revenue, guys. So guys, this is the latest price action, and due to the dip today, and according to this price, which has actually not affected our calculated market cap so much, and I didn't want to change it in throughout the video because that would have taken me another 1 to 2 hours. So that's why I just thought that I will add this current market action in this part of the video. So as you can see, the renewed market cap would be approximately around $2 billion, which is still 20 times cheaper compared to SunNova, which has no price to earnings ratio, plus it is trading at 40 times higher than its revenue, whereas Sunlight is trading just 20 times higher compared to its revenue. So now let's compare it with Sunrun, which is one of the biggest competitors market cap wise, plus stock price wise, plus the earnings wise and the revenue wise. It is one of the biggest competitors, and Sunlight would have to compete with this company as well. So let's check this. So the current market cap is at $13 billion, and just check the price to earnings ratio, guys, 952 times its earnings. And whereas in case of Sunlight, we have earnings per share of $1. We don't have price to earnings ratio for Sunlight directly because we are just trading with the SPAC right now. So earnings per share is $1. This is what I calculated from the earnings report, what we just saw. So price to earnings ratio is the stock price, which is $11.90, divided by earnings per share, which is $1, which gives us a price to earnings ratio of just over 11, guys. So here, a really good comparison for you guys, and which is showing us that what an amazing value Sunlight is giving us right now at this particular moment. Now, of course, guys, price to earnings ratio is not the only factor which we should consider, but this is just to show you guys that at this value, I would definitely enter into this stock. And plus, with this current scenario of market correction, I hope it goes below $11, and that would be a really sweet spot to enter for this particular SPAC. And guys, to make things much better, we know that, okay, now that the company is not that overvalued. In fact, it is undervalued. Plus, it's not just me who thinks like this, and it's not just me who is quite bullish over this company. There's one more person who is quite bullish on this particular company and who has already decided to invest quite a decent amount of money. And this person doesn't need any introduction. This person is none other than Chamath Palihapitiya, and he actually already committed to invest $250 million in this particular SPAC and into Sunlight Financials. So I guess, guys, this is it, and I think I have given you guys enough information to help you guys to do your own due diligence. Again, this is not a financial advice, guys. This is just to help you guys to have a bunch of information so that your own due diligence can become much more easier. So please be careful with your money, guys. This is your hard-earned money. Don't believe and don't just blindly jump into any stock told by any of us YouTubers out here. We are trying our best to educate you guys, but please, that's it. This is like an education. This is for entertainment purposes to help you guys to make your own decision. So that's it, guys. That's all for today. Thanks a lot for watching. I'll see you in the next one. Until then, stay safe, stay healthy, and ciao.